everyone, it's Gail with Traders Help Desk, and today I just want to go over the number one reason that most traders fail. And it really doesn't have a lot to do with your indicators or your time frames or the market that you are trading, but other factors that are affecting whether you are successful or not. Now, before I get started, I do want everyone to read over the risk disclaimer and the hypothetical performance disclosure, because we are going to be looking specifically at hypothetical performance results. These results are random. It's random generated trades using an Excel spreadsheet that I developed. And I want to show you what the difference is between an out of the money, in the money, and at the money binary options, and what your winning percentages are, as well as what is clearly the number one reason that most traders fail. Now, this is a graph that shows the winning percentage is 45%, the losing percentage at 55%, your risk is 30, your reward is 50, and your commission is $2 a round trip. Now, this is using out of the money binary options, okay? And this is the chart that shows, not only what you would have made, but also your drawdown. And the drawdown is really important because it's the number one reason that most traders fail. So in this example, you can see that you have made over $5,000. And this is based on trading one contract. You can see that over here. You can see that your risk was 30. If you lost, it's 32 because it calculates the commission. And then if you win, you get a profit of $48.10. Again, that's based on the commission and the reward that is shown here. Now, anybody would agree that this is a profitable trading strategy. And you can see that because this is how much you would have made if you had stuck with the strategy. But this is where most traders fail. You can see between here, and that's trade 1 to just about trade 530, that it makes a little bit of money, gives it back. You go underwater right here, and then you go back, and then it comes back, and then it goes up, and then it gives some back, and then you're back to break even over here. This is very frustrating, but yet the strategy would make money if you just stayed with it. That's the issue, though. Can a trader sit through 500 trades of really not making profits? Okay, you go up, you give it all back, you make a little bit, and then you give it back, and then you make a little bit, and then you give it back. What most new traders want is this straight line up, and very seldom does that actually occur. Now, again, you can see that over time, this has made over $5,000 in profit. Very rocky start. And it is during this rocky period right here that most traders just actually give up. They can't continue mentally or financially to trade this system, even though it's a profitable system. Okay, what if you're using at the money and you have a 60% winning percentage? That means that you're losing 39.92% of the time. Your risk is $50, your reward is $40. So basically, if you buy a binary at $50, you set a target at 40, and you're able to achieve that 60.08% of the time, would it make money? Well, as you can see, this one actually still would make money. You've made just about $3,500 at this point on the graph, okay? But again, look at the rocky period that started it out. You make a little bit, give it back, make some, and then really give back over $1,500. you're underwater before it actually starts to move up. This is the way probabilities work. You could have the losing streak at the beginning, at the end, in the middle. It can occur anywhere. But again, this would be potentially a winning strategy if you could just stay with it. Now, these losses, I mean, you're not having more losses than wins because you're at 60.08%, but you can still go underwater. This is the drawdown, and that's what it's referred to is drawdown, and this is the part that most traders, even experienced traders, actually have trouble sitting through. Instead, by the time they get to here, they're ready to give up. Oh, it doesn't work. I've got to find something new. Actually, if they stayed with it, more than likely they would have made money. Now, this is at 62.85%. You can still see that you have a drawdown at the beginning, okay? But this strategy goes on to make right about $6,000 over here. Does that mean you don't lose? No. Again, up until about 475, you're barely keeping your head above water. Barely, okay? Your winning percentage is 62.85. Your losing percentage is 37.15. The risk to reward is exactly the same. The issue is, can you sit through these 500 trades? What I see is most traders cannot even sit through 10 losing trades, much less 500, before your probabilities actually kick in and you start making money. Again, the number one reason that most traders fail is the inability to stick with a strategy during the first couple of hundred trades. Okay, this one is using a deep in the money strategy. You're risking $75 to make $25. Your winning percentage is 82%. Your losing percentage is 17.69. Now you can see on this one, you don't have such a strong drawdown over here. In fact, you make some and then you make some money. And then you don't do anything and then you make some money and then it draws down and then it's kind of rocky a little bit. Then you make a new high, give some back, make some, nothing for a while. Then, of course, you make new highs. And then again, during this period right here, and this is from about trade 730 to about trade 1000, which is more or less about 300 trades, you're not making anything. Now, in this example, it's hidden in the middle of your strategy. And that means you've already made some money. This is one that most traders would actually find easier to stay with. But again, could you go through 300 trades not really making any money? This is where, again, most traders are going to give up. They're going to say, oh, it doesn't work anymore. I can't make money trading this. They're going to give up. What happens? It goes on and it makes new highs. Again, the inability to stay with a strategy that actually with time would have made money. Now, the strategies that I have started doing the signals on, you can see each one of them are over the 60% mark. The first strategy on the Aussie is 60.83, on the Euro dollar 62.76, USD JPY 61.15, USD Swiss franc 68.28. Really a very high number of trades. You see the wins, you see the losses, but again, could you stick with it? because just like here, you could have had 259 trades from get-go and you didn't make money on before the wind started kicking in. And that is what makes this so difficult to stick with, is the inability to make money right off the bat. Most traders, when they're trading binary options, they're doing it with maybe $1,000 account. Well, if you go back to, let's say, the 60%, since these are all 60%, and this is measuring the drawdown in the column F, okay, your drawdown at this point is $782. If you have $1,000 account, you're panicking. You've almost lost, 75% of your account, and you haven't made any money. So doubt is really starting to stick in. But then, as you can see, it comes out of the drawdown and starts making money. Can you stay with it? In this one, the actual highest drawdown was $1,384. So if you started with $1,000 account and all of your losses kicked in from get-go, this was negative $1,384. So you've already blown through your account, not because the strategy didn't work, but because you did not have enough capitalization to withstand the drawdown that would occur before your probabilities kicked in.